Welcome back, traders. We'll be taking a look at ICT's review from February 3rd. We're going to get this one started right away, but remember to like and subscribe.
All right, so we're looking at the daily chart here. This is the March contract, NASDAQ. And as I mentioned last night, this was the buy side bounce, sell side efficiency with a volume bounce at the low and a volume bounce at the high, which makes this a suspension block. And I mentioned how going forward, and what was salient to me was the midpoint of this, okay? This dotted line here, that's consequent encroachment. As long as we remain below that, we're going to be bearish, okay? So today we tried trading through it, took out last Friday's high, traded up inside the upper half, left no body up there. So the wick traded there only, and then we gave up the ghost. And I want you to take a look at the fib settings you guys are asking me for. So this is how you do it for the eighths. So there's quadrant levels. There's your upper or lower quadrant, consequent encroachment, upper or lower quadrant, and then you have your eighths. Okay, if you put these levels in there, you'll get levels that would be pertinent for more highly specific quadrant levels or gradient levels. That's why I originally started with gradients, because I knew by seeing quadrants, it kind of makes it difficult for me to segue into eighths and sixteenths. Oops, I shouldn't have said that here. But the point is this. The idea of looking at wicks, that's not something new here. We've been talking about that. We grade those because they're gaps, just like this is a gap down here. Okay, so this would be graded. And you can see that we traded down the consequent encroachment of this discount wick. And this discount wick here, we traded up into this quadrant level right there.
All right, so like I said, I just got back recently and I haven't seen any of his previous videos, so I didn't know he said to be bearish below the midpoint of this suspension block. Now in my outlook, I did say that I was looking for price to come back into this gap or even down into this volume imbalance right here. Now as for grading down to eighths or even sixteenths, if you're a beginning trader, just start with 50%. And once you get used to that, then go into fourths. In my opinion, eighths and sixteenths are really getting detailed, and you only start using these when you're more experienced and you're already used to using quarters.
If you're struggling right now, trying to read this price action, just know that it is very, very difficult when you're inside of a range like it is here. Like, this is a lot of geopolitical manipulation, a lot of manipulation on the part of the metals markets. There's so many things going on. You're being challenged by every possible opposition there is. Okay, it's incredibly difficult right now. So if you're feeling that, just take a couple months off. Just come back in the springtime. I promise you, end of March, going in the beginning of April, the price action will be far more cleaner than it is now, and all of this beginning of the year stuff will be behind you. But I know some of you just can't imagine doing that. But for a brand new trader, for a brand new student that is now trying to get to the point of trading with real money, should you ever decide to do that, I believe that would probably serve you better, because the markets are stuck in these large ranges. And unless you know how to trade inside these ranges, it's going to be very problematic for you. And you're probably going to blow your account. You're going to go on tilt. You're just going to revenge trade. You're going to get frustrated, or you're going to think that there's no way for you to be able to do it, when it's just simply a very poor, technically timed approach to doing it on your present skill set.
Now, usually I skip non-technical talks like this, but here I think it's important for you to hear that right now is a very challenging time to trade. Working on your ability to not trade is just as important. You need to work on your mental fortitude to not get FOMO, to not get tempted into an impulsive or unideal trade. Work on your patience, and it will serve you tenfold when it comes time to actually trade in the spring.
All right, dropping down to a 1 minute chart here. You can see I shared a chart this morning and asked you, what did you see? Or what do you see? To post with a chart, and I have captioned it WDYS question mark. That's what it means. What do you see? And market rallied up in here, made slightly higher highs around what level? This is that consequent encroachment of that daily suspension block. As I mentioned last night in the commentary, I said that this would be the trigger. Okay, this is the framework. If we are unable to trade above that, we're going to remain bearish. So it just so happens, we'll look at these highs in a moment, but time of day, we're in the pre-market session, and the market fell away from that level and gravitated down to the new week opening gap And this level here are simply sell side liquidity pools. And the market went lower. And all of these levels here are those gradient levels on the discount wick I mentioned on the daily chart. Okay, so there's 2 wicks that I graded. This was the lower of the 2. Zooming in up inside that daily suspension block, here's that consequent encroachment level. So what am I showing here? It looks like an entirely different chart, entirely different market, doesn't it? No, it's not. Go back up one more slide. What I'm going to do is I'm going to zoom in on this area right here. Okay, this is the area I'm zooming in on. And that's what this is right here. Okay, so I'm zooming in, this run up, and right there, that's the part I told you I was going to zoom in on. If you look at the highs, we're above that daily suspension block. So it's trying, but we're inside that daily discount wick that I graded. You can see it traded up to these levels here, here, and then we're trying to make the market jagged above the very specific level I told you last night to watch. That was the fulcrum point. If we go higher and use the upper half of the suspension block, it would act as a bullish scenario. If we fail to get above it and lay bodies down up in the upper half of that on the daily chart, you can see that we only whipped up into it. That's all through this price action here. And that daily suspension block turn inversion fair value gap that's bearish, that's the midpoint of that. So we get an SMT divergence. This is ES, okay? And I have this line plotted and posting the change of only the high price. Okay, so this cumulative line here is showing the cumulative price of the close. I'm sorry, the high, not the close or the low or anything like that. It's the high. Because what I'm doing is I'm comparing relative price action with the highs of NQ here with the relative highs formed at the same time in ES. Okay, same delivery contract month, ES H2026 on the trading view. Okay, so you have your divergence there, which is a qualifier. It is not a selection tool. It is not a timing tool. Okay, what we're looking at here is these inefficiencies. So we're trading up into that. Lots of shorts could be taken there. Shorts could be taken in here, right in here. All the inefficiencies, beautiful little segments of price action. And the market drops off precipitously, as you'll see. That's the same divergence on the SMT.
Now, don't go crazy with SMTs. Make sure you always note the time. This SMT here occurred during an important time, 8:30. Now, if you don't pay attention to the time, you'll see SMTs everywhere, but they won't really matter. Like he said, SMTs aren't qualifiers. They're just like an extra bump to tell you that you're on the right track. Really, don't put so much importance in these PD arrays on the daily chart, market structure, liquidity pools. These are going to be much more important, and you should focus on those rather than just looking for SMTs.
Breaks aggressively lower, taking out that sell side liquidity pool, that sell side liquidity pool, trading down into, as I mentioned, on X. We were up here. I said I'm studying to see if it'll get to the new week opening gap high, and just like a dog whistle, the market heard, ran right down into it, used the high of the new week opening gap, then traded to the low of it, broke below it after finding premium sensitivity to it, and broke into the halfway point of that lower discount wick on the daily chart. That's what that red line is here. It's also that sell side right there. So we have a little bit of a consolidation of these lows in here, and the low of that daily discount wick is obviously the next intermediate term draw on liquidity. This is the opening range for regular trading hours today. Previous day's settlement. This morning's 9:30 opening. That's your range here. Halfway point here. Notice what happened. We opened here, traded immediately down to halfway, ripped down to a full gap closure, and then did what? Did it bounce and start to rally up? No. Key takeaway here, okay? We're already in an area where we were proving that we couldn't go higher because we couldn't get above the consequent encroachment of the daily suspension block I mentioned last night on the commentary. This larger orange box area, the midpoint, which is just above this chart's presentation right now. We gapped up, then we gave up the gap entirely, and then went outside of the range low of the gap, which is this right here. Traded right back inside of it once more into a gradient level, and then gave up the ghost. Went lower, traded outside of the daily suspension block, low, broke down, and then continued on. And that's that area up here. It just kept wilting lower and lower. Spent some time in a new week opening gap, allowing for ES to get to its new week opening gap. And then everything started moving in a general gradual movement lower, digging into the gradient levels on that lower discount wick on the daily chart.
Okay, so the main takeaway from this is to be very careful. Right now, the market is very difficult. Volatility is extremely high. Even if you enter in a good trade, volatility can snipe your stop before actually moving in your favor. You see ICT doing more trades on the micros instead of the minis. That just signals and shows how dangerous the volatility is right now, and it could get even worse. So I expect the rest of this NFP week to be pretty sideways. The market already moved a lot and did a lot of work Monday and Tuesday. So try to stay out of the charts if you can and stay safe. Now, please give this video a like and subscribe to help me get over 1,000 subs. And until I see you next time, safe trading.